So let's talk about some of the moves that we made. We didn't do this for all clients. Most of our clients are diversified, so they're not Rebellionaires. And so Monday, we did buy back Tesla prior to Monday, so that was higher. But
still a good trim and add, but we certainly didn't completely bottom tick the stock. And to be clear, that's not what we're trying to do. We don't have any claims on abilities to perfectly bottom tick and top tick, but as active portfolio managers, what we wanted to do is get heavier into cash, money markets, fixed income when we were smelling a little danger. And now that we are at peak fear, kind of swing that pendulum the other way.
So let's talk about maybe what we did on Monday. I was on Larry's show on Thursday, and he asked me about the sell-off because stocks were down like 5% on Thursday. He was asking me about that. And I said that I expected the market to potentially bottom Monday morning. The reason is that I expected the sell-off to continue on Friday, and that there would be people who wanted to sell but wanted to think about it. So we did see a bit of a low on Monday morning. Sunday night was crazy. A bunch of stocks were down 10%. Some were down 17%, like Robinhood and App11 or whatever. There were a lot of fintech influencers who were telling people to sell or that it was going to get much worse. But we also had Kramer come out and say that the market was going to go down another 20%. Also, Bill Ackman flipped. So like 48 hours prior to him going off Sunday evening or whenever that was, he was kind of for what Trump was doing and saying, give him some time. And then he flipped and went and panicked. So we sense that negativity is extremely high. And this is just from my years doing this. Yesterday was actually my 20th year anniversary at Halter Ferguson Financial doing this for clients.
So I think that's important to point out because you were there for the Great Recession. You were there for COVID, obviously. So you've seen these cycles a few times and shared stories with me about people reacting emotionally and ordering you to sell at or near the bottom, which is just, heartbreaking. But if you had essentially just managed the portfolio prudently and all the more if you had gone a little heavier into bonds and fixed income ahead of time, and then therefore had some dry powder to deploy back into equities when they're at relative low valuations, that's the best situation that you can be in. But it's obviously hard to do that. I mean, with all the volatility I've experienced with Tesla in my own personal portfolio and managing client funds, I feel like I've seen a lot and I'm somewhat hurting. Numb or yeah. It's probably not a good thing. Traumatized deeply to my core, but I'm definitely feeling it right now. We're in the midst of calling a shot by going a little heavier into equities. And that's a stressful situation to be in, because you might initially be on the wrong side of that, maybe for a week, maybe for a month, and then you're looking bad. You're essentially accelerating some underperformance for a period of time when you make that call. Yeah. But what I believe is that it's the right thing to do anyways. I think a year, 5 years from now, clients will be looking back at how we bought during these times. I think that's going to be something that we'll feel pretty happy about, even though we might be on the wrong side of that for some period of time on the short term.